welcome back everybody to Millennial Money Mastery. I'm your host, Angel Abundance, the financial physician. And of course, as always, I have my co-hosts, Melissa Uribe and Alex Garcia. How's it going, guys?
Doing great, going great.
Good. We've had some good shows the past couple of times. What did we talk about? You want to recap?
So the last time what we touched base on was using the biggest tool, which is your income, and how to protect it and how to make it grow.
That's right. And I think one of the last things that we were talking about is, where do you put your money when you're going to save it, right? When you're talking about growing your income or protecting it, right? Where do you put it to protect it and to keep it, safe? So that's what we want to talk about today. That's what this show is all about. What are the best places or the best ways where you can save your money, right? So let's just get one thing out of the way, the worst place that you can put your money, right? So what do you think is the worst place where you can put your money?
Most people out here put it under their mattress.
Oh, man. Yeah.
In a cereal box or in a little shoe box under their bed. Rolled
up in a knot in the back of the freezer. Don't think I see you out there. You know who you are.
Yeah.
No, that's true. But pretty much just saving cash, right? Saving cash in your home, whether it's in a safe or under the mattress or wherever. The point is not so much where it is in your house. Hopefully it is safe in a safe or something like that. But it really has to do with the fact that it's losing value. Okay.
Yes.
Now someone out there might be like, "What do you mean it's losing value?" No, I have $1 and it's still $1. Yeah, but there's one little thing, one term that you should probably know if you don't know, which is what? What's that term?
Inflation.
Inflation. That's right. Inflation. I'm sure there's a lot of you out there that are probably hearing all this crazy stuff about inflation. The last numbers that came out for inflation were obviously July 2022, 9.1, 9.2%. Okay, now those are published numbers. And if you know anything about the published numbers, let's say they've been cooking the books a little bit. Okay, so that's not realistic. It's actually probably much higher, but it is relative, maybe where you live, right? It depends.
Yeah.
So think about that. Okay, if the value of your dollar is now lower because cost of goods is higher, meaning, right? What does that inflation mean? That just basically means that the price of goods is going up. So if a gallon today costs, of gasoline costs, $5 or $6, unfortunately, inflation could make that be $7, $8, $9 in a few years, right? Yeah. So that basically limits your purchasing power. What does that mean for the average person? Well, if you have $100 saved, next year, that $100 will only be able to buy you about $91 worth of stuff. So your cash is actually losing value, right? Think about that. So people are over here stacking just cash and cash saving it for a long term, not actually having it grow, earning some interest somewhere. And we're going to talk about that. And their money is actually getting less and less valuable.
Yeah.
And people don't know that.
Yeah, and I feel like that's a really good point because a lot of people, they don't think about that. A lot of people, because I meet a lot of people that are like, no, I don't trust the banks. I don't trust this. They take your money and, interest rates all fake. And they're like, okay, but they don't think about your dollars. They don't see it as your dollars losing, a value every year.
That's right.
They're just like, oh, I got $100. It's going to be my $100 forever. Well, yeah, but it's not going to be worth $100.
That's right. And probably the easiest way to think about this, and it's very easy for people to kind of think about it. Let's say, millennials, I mean, you were born in what year, Alex?
97.
97. Okay,
Yeah.
so let's just say in 2000, right? If you bought, let's say, I don't know, like a big stick or an ice cream, right, from the ice cream truck, I mean, maybe you're paying about $1, maybe $1.25, $1.50. Yeah. Right now, it's probably like $2.50, something like that, right? Mm-hmm. Have you bought an ice cream from
It's actually $3 now.
It's $3.
$3
oh my God. But that's inflation.
Yeah.
I remember I used to be able to buy a big stick for 25 cents.
Oh, my
right?
God.
And I remember my mom was like, "Man, I used to pay 10 cents." Like, no, Mom, it's 25 cents now. So that's inflation right there. That is just very easy to think. I mean, you look at new cars, houses, everything's just gone up in value, right? So that is probably why saving just cash is one of the worst ways to just save money. There's a very famous economist. He runs one of the biggest hedge funds. His name is Ray Dalio. He basically coined the term "cash is trash" because of that reason. Because if you know that even on a regular year, not even high inflation like right now, 2 to 3% of inflation, right? Every year there's average 2 to 3% of inflation. So no matter what, your dollars are going to be worth, 2 to 3 cents less every year, or they're going to buy 2 or 3 cents less of stuff.
Yep.
So very interesting. Now, so the question is, what is another good place to save money? You mentioned
Yeah, I mentioned it. Number 2 would be banks.
banks.
Most
Banks,
common
the
people.
evil banks, greedy bankers. Here's the thing about banks. Okay, so it's safe, right, to put your money in there.
Yeah.
Right? Let's be honest. That's probably the main reason why people put their money in the banks. It's just safe, right? You're giving custody of your money to this bank, and then the bank's going to go and use it to make money or whatever. But they're going to pay you interest by keeping your dollars in there, right? Keeping your money in there. The problem with, let's say, just a regular savings account, right? Checking account, you don't even really get anything, but a savings account, what's the average, take a guess, what is the average interest that a savings bank pays in America today? What do you think it is? Throw a number out.
Throw a number out, I'd say like 1 to 5.
1 to 5%, if only. At one point, yes. At one point, yes. Today, the national average for interest in a savings account is 0.11%.
Whoa.
It's not even one.
1. And that is average. So that means some are paying a little more, some are paying less. Most, if you look at all the big top banks, which are Bank of America, Wells, Chase, U.S. Bank, all those big banks, they're going to be paying your savings account like 0.01 or 0.05 or less than 0.1%. So it makes you wonder, like, dude, why are they paying us so little? Right? What do they charge you to get a loan at a bank?
Oh my gosh! Like,
let's say you buy a house. If you buy a house,
Yeah.
like, what's the average interest rate right now on a house?
on a house right now, oh, it actually went up. I think it's like 6
It's about
or
6,
7.
right?
Yeah,
Yeah,
6 or
it depends.
7,
Depends on what you're getting. Okay. Credit cards. What is the average interest rate you think most people pay on
I
a
think
credit
the
card?
average one, I think it's like 17.
Yeah, so like
17,
17 to 24%, somewhere around there. So they're charging people, right? You put your money in the bank, and they're charging people 20, 5, 6, whatever it is, percent, and they're paying you 0.0 or 0.11%. There's a reason why those banks have big names on their
That's why
buildings.
they
So-
have to make so much profit right there.
That's
So
right.
Yeah.
So so think about that, right? Most people, that's who they go to, right? They put their money in the savings account and they'll go, well, at least it's safe or whatever. And you have some protections. You got the FDIC insurance up to $250,000, but you get no growth and it's losing value.
Yeah.
So if you're losing 9 cents of every dollar to inflation, like, is that the best place to put your money?
Probably not. No.
No.
That's the harsh reality.
Yeah. What did your parents tell you about where to save money? Did they ever teach you about saving or anything like that?
Yeah, actually, my parents, they started seeing how inflation was back then in 2008 and how the market was crashing. So they decided to open a big account for me when I was just 12 years old, really little. They opened a kids, bank account, something where they can start putting money in. And as I grow, I can start putting my money in as I become a teenager and get a job. But that's just pretty much something they've implemented for so long. And these are my parents were immigrants. They came to the U.S. to look for a better future for me and our family. And that's what they were taught. They were taught you have to put in a bank. You have to put in a bank. You have to save. That's the most trustworthy place you can put it. And unfortunately, that's where people go to. And
Yeah, and I think most people just don't know that there are other options out there, right?
Yeah.
I think most people, and we're going to get into some of the other places you can save money, and these are the ones that probably most people don't know about. So if you're out there, I want you guys to really pay attention because this just might help you, educate you on what else is out there or what are the options, right? So
take notes.
So if we know that a regular traditional savings account is probably not the best because it's losing value, you're not getting any growth. And by the way, let me just try to put that in perspective, right? Because people say 0.11%, oh, that's nothing. Well, yeah, think about it. If you have $1,000 saved, okay, in that account, and you're earning 0.11%, which is the average, right? Some are even less. That's $1.10 of interest for the whole year.
Oh yeah, they count it by yearly. By the
It's
way,
APY, right? It's
yearly.
annual percentage yield, right? So you're talking about $1 for have $1,000 saving there. You're only going to get $1, and on top of that, you're gonna have to pay taxes on that dollar every year. Let's say you're at 20%. If you're at 20%,
But it's safe.
But it's safe, exactly.
But
But
it's
it's safe. Yeah,
safe.
it's safe. So yeah, I mean, really, you'd only be earning about 90 cents or something like that. So yeah, not the best place to put your money.
Like,
All right. So now the other option is, let's say at the bank, is called a CD. Do you guys know what a CD is?
yes.
What's a CD, Alex?
So CD, mainly it's certificate of deposits.
That's right. Certificate
Yes.
of deposit. That's right. So and you were saying that people
Yeah,
use
so
it
and
for-
people, many people use it because I've heard it. My parents didn't use it for myself, but most kids they use it for college funds because you get an interest rate every year, just like in the savings in a bank account. So most people put it in like 10, 15K into, and there's I think there's a certain amount you have to put in to open the account. Like most people think it was back then. I think it was about 5,000. If I'm not
yeah.
correct,
There's a
I
certain
think it was about
there's a
5,000.
minimum. Yeah.
The minimum that to put, and then every year you get a certain interest rate. And same as a bank account, savings. It's not the best. I remember back then it was what the average was. It was 1 to 5% is what they would give you,
Yeah.
but now I'm pretty sure it's even lower. Now I think it's
Yeah.
around. I think now it's about
National
around
average is
2.5.
around 2.5%.
Yeah, 2.5% now.
Yeah.
So
And you may get a little more, a little less, depending on the time that you put it in, right?
yeah.
So one of the things about certificates of deposit is, which is probably the biggest negative, is the fact that it's locked up, basically. Like you basically give the money to the bank, and it's a contract for a certain period of time. You could do a 3 months, you could do a 6 month, 9 month, a year, even 3 years or 5 years. And they used to have 10-year ones, but basically, let's say you get the 5-year one because you're gonna maybe earn the most interest. Like your money's kind of locked in there for those 5 years, and so you need it. You need access to that money. If you want to try to take it out early, they're going to charge you. You're going to have some sort of a fee or something like that, a penalty for pulling it out too early. So
Yeah.
Yeah, that's unfortunate.
It's the only
Especially
yeah.
if you have an emergency or something, you need that money back.
that's right. And most
Yeah.
people are using their savings account as an emergency or whatever, or they're saving it for some long-term or shorter-term purchase. But that I would say that's probably one of the biggest drawbacks is just that it's not liquid, and we call that being liquid, being able to access your money really easy, right? So in a savings account, it's liquid, right?
And just to add to that, there's actually it's as how you said it's not liquid, and it's you can't touch your money, it's untouchable. But if you do want to touch it, it has fees. Something that's almost the same to that is actually most people have it at their current employers is called a 401k. So most people don't know this, but once you have your money in there, yes, you get a good amount of interest rate every year. But same as a CD, it's untouchable because what happens when let's say when you want to take out a loan out of your 401k, let's say you have 10, 15K saved up and you want to take out a loan. Well, they're going to charge you a certain percent of that loan. Mm-hmm. So there's fees to that. So it's basically it's untouchable. Your money's untouchable because you can't take it out.
You have to pay to use your own money.
You have to pay to use
you have to pay to use
your own money. Yeah.
Yeah, for sure. For certificate of deposit, I think that's probably one of the biggest drawbacks to the CDs is the fact that it's not liquid. You can't access it. But you do have some good growth. I mean, I was looking at some of the numbers, and for let's say a 5-year CD, you can get as much as 3.5%, maybe 3.25, 3%. But still, if inflation is 9%, you're still losing like 6% of your money, right?
Yeah.
So it's locked up and everything else. But when inflation is normal, 2.5 to 3%, yeah, if you're earning 3.5%, okay, at the very least you're beating inflation.
Yeah.
Right?
Mm-hmm.
So that's something to think about. But again, you're locked up, and that's for the 3 or 5 year options, right? So let's then think about what's another place that people can save money. This is probably one that most people don't know about, and that's called a money market account. Now, a money market account is basically some type of a savings account with the bank, and you're going to earn a little bit more interest than the regular savings account, but it's not much more. It's like 0.08, and I mean that's like the average. Some it can be more. There's also money market deposit accounts, but here's the difference with those. The money market account is not FDIC insured, so you don't have that protection, right?
Yeah.
So that's not good. So again, still not beating inflation, and still, it's not it's not FDIC insured. So if you're going to put your money in a money market, make sure it's a deposit account. But just so you guys know, those money market deposit accounts usually have limitations. Like you have to have a minimum, an initial deposit and a balance. You have to maintain a certain balance. Otherwise they'll charge you. And then also there's limits on the amount of transactions you have. Like it's not really meant for being able to pull money in and out like fast. It's you can access it, but there's limitations.
Wow.
Have you guys ever heard of money market accounts? As millennials, I mean, it's probably not something
yeah,
you guys
I've
aren't
never heard of.
about.
Yeah, I've never heard of that.
Yeah. So that's again, those aren't typically as popular, but it is a good place. Like let's say if you were gonna save, and you don't want it locked up, I'd probably put your money there for like those emergency funds, those short-term savings accounts that you need to have money access to the money, liquid. Make sure it's accessible. I would say that's probably your best option. Okay, but that is not the best place to save money because you're still losing a lot, right? There is another option, and you guys know what's up. You guys know what's up. Melissa, tell us what is the best place to save money.
If you haven't heard of it, you're going to hear it today. It is called a cash value savings account.
Cash value savings account.
It
That's
even
right.
has
That's right.
a catchy name to it.
That's right. What is so good about what makes these types of accounts better or the best place to save money?
Now, how we touched base on before, we talked about money not being the safest place. Now, with this type of account, your money is actually safe enough to where you're going a greater interest rate of 5 to even 8%, depending on how
the market does or whatever.
Depending on how the market does. So, I mean, it definitely beats those that are 0.11%. I mean, it is at a different interest rate percent, but
yeah. One of the things about these types of accounts that I like is the fact that your money is liquid. Like you can access it. It might take you a couple of days to get the money, but it's not locked in, right? It's not locked up like in the certificate of deposit. And you can have those higher interest rates, like you said, right? 5.65%, I think is around where people are averaging right now. But it could be more. It could be even up to 8 or 9%, depending on the the company that you use or that you have your money with. But one thing that I have found that with these types of accounts is in a normal year, right, where inflation is 2 or 3%, if you're earning 5 or 6%, okay, well, it's growing and you're actually beating inflation. So your money's actually earning interest and growing in value. The other big benefit that a lot of people don't understand is that even though it's not directly invested into the stock market, it's tied to the stock market. And so you're able to kind of capitalize on the gains when the stock market does well. But if, say, the stock market doesn't do well, you don't lose anything. Like you have protection of your principal, right? And any gains that you've had, that's also protected. So that's probably one of the biggest reasons why I like it. So you have that protection, that it can grow, you got higher interest. But Alex, what's probably your number one reason why that's a great account?
So one of the biggest things which I think people would love is number one, being tax free. And that is my big reason why I love using it. Just because it's tax free, just like how I talked about earlier about the 401k or a CD, there's fees taking out your money. And now in the cash value account, you can access your money tax free whenever you want. You have access to that money. It's your money, so you can access it whenever you want. So if you have 15, 20K and you want to, let's say you want to buy a down payment for a house or a down payment for a car. Let's say, okay, I want to take out 5, 10K. Take out 5, 10K. But what's the great thing about this is if, let's say you take out 5, 10 grand. Now, let's say you want that show that money still into your account. You can borrow that money so you'll borrow that money. You'll still be using that money. So now you have split dividends now you have 2 assets split, and now you can access it. Now you have both.
Yeah,
and now your money can accumulate now tax free. That's
well, okay. So a couple of things. Let's break this down because that's some good stuff right there. So, mind blown, right? All right. So you said a couple of things there. So tax free. That's really important, right? So we talked about an savings account, whatever interest that is, right? 0.11% or 2.5%, whatever. Every year you're going to be paying interest on that, right? These types of accounts, you're not paying the interest. you can access it. So, like, I think that's a lot of people like miss that part, right? When you understand, like, man, if I got to pay taxes on the whatever little growth I have every year, yeah, why don't you put your money where it's not going to be taxed, right? The other things you said that you can pull the money out, but you can pull it out a certain way. You can borrow against it, right? But someone said, well, I'm going to borrow money from myself. So does that mean what I have to like pay myself interest?
Yes. So, well, basically, what happens is you borrow the money, and the company, whatever company you're with on the cash value account, will charge you. You're basically you're paying yourself back, but with a little bit of interest. The interest is they're not
not a
as
lot.
high. They're not as
It's a
high as
simple
10, 15. Yeah,
interest,
it's a
right.
simple 2 or
4%.
4 or 5% what they'll charge you. But you're basically paying yourself back. You're not paying anyone else. You're paying yourself for your own money.
You're basically becoming your own bank.
Yes.
You're becoming your own bank, right? And you're paying yourself higher interest than putting your money in a savings account. It's pretty amazing, right?
And if you think about it, if you still have, let's say you took out $5,000 out of the 20 grand, it's still showing you're winning interest from that 20 grand. So you're basically, if you think about it, you're winning still, because the interest rate you get every year, it's basically paying off what you're paying back yourself back.
Yeah.
If you think
and
about
that's a key thing. I was going to get into that because you said that you basically have two assets, and I want to break this down. But we're going to go details. You know what? This is probably a really good topic. You know what? And how about we do this next video? We're going to really break this down. But just to kind of tie this up, you can pull the money out. Let's say I use it to buy a car, or how about we not use it to buy a car? Let's buy an asset. Let's buy something that can go up in value, right? Let's say everyone wants to buy a house. You guys want to buy a house?
Yes.
Is that one of your goals?
Yeah, that's our goal.
Okay.
Yes.
So you know what? Why don't we just the next video we're going to talk about where's the best place to save your money to buy a house. I'm going to show you guys how to do this. But let's say you do buy a house, and right, and the house is typically going to go up in value, right? You're going to have an asset, but if your money still stays in your account, technically, quote unquote, growing. So now you basically have two assets, right? You pulled out, let's say, the 20 grand to put down on the house, right? You buy this house, and then this thing starts going up in value, and your 20,000 still keeps earning and growing. So you basically have two assets now. Pretty amazing, right? Pretty amazing, cool stuff. Yeah. And this is look, I didn't learn this stuff until I was in my pretty much when I turned 40. I'm really, really glad that you guys are learning this stuff now, right? Because you're going to be in a way better position in the long run, right, than for someone like me who learned it too late. So, what do you guys think? What are some of the, you did mention buying a house, but like maybe what are some other things you think you can use these types of accounts for?
Definitely starting a business. Definitely,
Nice.
that's one of my main goals. I mean, yes, make another asset with buying a house, but imagine you use that for another type of asset of building a business. Now you have three. I mean, possibilities are endless at this point. And if you're young, if you're a millennial right now, thinking about how to make your money grow and don't really know where to put that money, this is where you should put your money. And this is why we are here, giving millennials the knowledge of where to put your money and why.
That's right. That's right. Absolutely. One of the last things I'll talk about with this account that people need to consider, one, not everyone can qualify for these types of accounts. There is, a qualification you have to go through. You have to get some sort of, screening or whatever, has to get approved. But once that's in place, there's also limitations on, how much it's going to cost you or how much you can put in, whatever, depending on, how old you are or if you're male or female, things like that. But it has some great benefits too that a lot of people miss. One is that let's say you're putting the money in, you're saving the money, but let's say something happens to you, the money can actually grow and blossom and turn into a tax-free, something you can leave to your heirs, right? So that's a huge benefit. And the other thing is that it has what we call living benefits. So if you get sick, you get into an accident or something, you can actually access this money and actually more money than what you've actually put in. So it has a lot of other benefits. We're going to touch into that, but cash value savings accounts, if you're not familiar with them, they might also be called tax-free retirement accounts or LIRPs, right? Life insurance retirement plans. So definitely something that you might want to consider. Reach out to like an expert like Alex or Melissa if you need some help. But continue on back watching this channel. You guys are going to get some great tips and tricks on how to save money, how to grow your money. In this case, we're really just talking about savings. But next, we're going to definitely be showing you guys how to use these types of accounts. But also, let's talk about some, let's say, investing and what are the best places to invest your money and maybe some good percentages and things like that. Maybe we'll talk about that in some future episodes. So,
Okay.
Yeah.
anything else you guys want to add about best places to save your money?
No, just hope you guys learned a lot from this and took a lot in. Just thank you for watching our show, and anything.
Yeah, pretty much just definitely be ready. There's way more. I mean, if this blow your mind, there's way more to it. So you just gotta stay tuned.
That's right. That's right. So go ahead and smash that like button. Make sure you subscribe to our channel and hit the notification bell so you know whenever we put out new content. We're going to be very consistent. We're working on being able to do a live stream. So pretty soon we're going to have a live stream. We're going to have AMAs. So you'll be able to ask us anything. So that's what AMA stands for, Ask Me Anything. And yeah, we're look forward to hearing back from our viewers out there.
Yeah.
And comment down below, maybe what are some topics that you want to learn about. If there's maybe a financial term or something that you really want to know about, drop it in and we'll gladly put some effort into, giving the people what they want to know.
Yeah.
All right, cool.
Exactly.
All right, everyone, take care. This has been Millennial Money Mastery. Peace out, everybody.
Later.
Bye.